Hello traders, good evening. This is the trading plan for 22nd August. Let's see what kind of moves we can get on Nifty. I'll now be sharing what are the levels that I'm looking in Nifty futures that I'll be using to both trade futures and options in Nifty and Bank Nifty indices. So what happened on Friday was pretty clear by the end of the day that it was indeed a day where we saw mass liquidation of longs. We opened right within the previous day's range, and in spite of opening within previous day's range, we failed to scale through Thursday's highs and we started selling off. Now, how exactly do I determine if we are going to move up or move down somewhere whenever we are trading inside a ranging markets, for example, this way? Let me show you. Whenever as I use both volume profile and order flow, if I look at things from an order flow perspective, the first and the foremost thing is the context of the markets. Where exactly are we opening and what are we doing? And we opened within on Friday. We opened within Thursday range, which itself indicated a neutral opening. When it's a neutral opening, as day traders, please remember this tip. Whenever it's a neutral opening or a flat opening, that can actually be one of the best days of your trading, if at all you know how you can identify the trend early on, because you as day traders you get a chance to capture the meat of the move, the majority of the move on whenever we have neutral openings, and then it gets converted to a trend day. This is the opening 5 minutes candle, and you can see how on the ask side sellers started coming in immediately at this level 17 965 to 975, and then you can see subsequent rejections there. One, two, three. Price was being rejected by sellers every time it started pulling back. So it indicated to me somewhat that when we have a neutral opening, it was a neutral day. Plus, until we take out the highs of the previous day, then we cannot expect that there will be an upside move in the markets, because considering the fact that we had a late reversal on Thursday, so on Thursday, second half reversal on Thursday, I would rather have expected all these big buyers who bought heavily here to actually show initiative, but it was missing, honestly. And when we see such kind of a market context and price action right at open, when the tape indicates presence or slow building of positions by sellers who keep rejecting prices at their own crucial reference level. This is the area where sellers had slowly started building in positions, and then you can see that once we started breaking down, we went into a chop, a sideways zone for a good part of time, almost 45 minutes to 1 hour. And you can see that in this job, the ask side the bid side volumes are high. You can see quite some imbalances on the sell side, which indicated that sellers were loading up on their positions, and it was most certainly not the time to go long unless we scale above day size. Now, coming back to the market plan for tomorrow, as we had a good trend side day on Friday. Right now, the crucial reference that I'm monitoring is 17,780 to 17,820, and above 17,820, 17,840 is also a level as per order flow that I'm monitoring. Unless we go above 840, I wouldn't be taking longs in this market. If we have a look at, this is the volume analytics zone, and this is a simple session profile. If you look at the simple session profile, you can see that the value is built at the far end of the move, that is at the closing of the move. You can see value has been built, and for us to go up now, this area has to be taken out 17,840. Only then there is a possibility that we can at least test Friday's highs and then go above the swing. Until then, sellers are strongly in control. To the downside, when I look at it from a composite profile perspective, I can see that the extreme end ranges of 17,650 is a very important reference, and that's the area I'm expecting the markets to test once we break down through Friday's lows. You can see that this is an area which was tested twice. We had a first test and then a second test, a deeper test. Markets were probing for liquidity. This is what is called as a liquidity probe, essentially. And you could see that responsive buyers had actually come in here. These buyers essentially were thinking that the markets were in a bargain, we're trading at a bargain. So it's a good chance for us to now be long in this markets, and we need to see how their intent holds up on Monday morning opening. If it's a gap down opening, then there is a good chance these buyers can liquidate their positions, and we can see quite some chop around these areas. And this is my crucial deciding zone uh, for the short term trend. If we go below 17,650, then I wouldn't be surprised even if we test 17,500 and 400 in the coming sessions. So from a short term perspective, 17,650 is an important level. Let's see if we see fresh responsive buying coming in, or if at all these buyers hold in, who bought on Friday, who responded on Friday to the sellers auction process, actually hold in or pack up. Moving on to Bank Nifty, if we have a look at the charts of Bank Nifty, in case of BN, the reference that I'm looking at is 38,980 to 39,110, and this is the area where the most aggressive sellers are present of Friday. So once 38, 39, 1110 if is taken out, then this again offers a very good chance for put writers, especially for those who are looking to go long, to slowly start writing puts with this zone as your stop loss, 38,900 as your stop loss. Then once we scale above our Friday's value area high, which is your previous day's value area high, there is a good chance we can resume the upside move. But as long as we are below this yellow band, then I'm expecting a continued downside to sideways movement in Bank Nifty. To the downside, even the next immediate level that I'm looking at is 38,540 from a composite volume profile perspective. So there is a good chance we can test these zones in the coming sessions, if and most of it majorly depends on tomorrow's price action. If it's a gap down opening, then that shouldn't pose much of a problem for day traders, since that would indicate a downtrending, a continuation of downtrending markets of Friday. But however, if at all you have a range opening which is opening within Friday's range, that would be the trickiest markets to trade from a day trader perspective. So if we open within Friday's range, then my strong suggestion to day traders would be to play the pullbacks, but play the pullbacks at the ranges that I have suggested, but not to attempt any kind of breakouts or breakdowns until we see a range expansion above Friday's range. Until we are within Friday's range, pullbacks to the range play is important. And as a rule of thumb, always try to play one side, either in the direction of the ongoing move, which is towards downside, or a counter move towards the upside. But in comparison to Friday's move, but don't try to play both long and short, because that's one of the easiest ways to burn your fingers. I hope this video was useful, folks. If yes, please make sure to like and subscribe to the channel. I also share my updates in live markets on Telegram. The link to the channel is given in the description below. Please make sure to join that. Thank you all, and see you tomorrow bright and sharp.